Hey, Bulls, it's the Sherpa, Chase at Ever Bullish, here with you to bring you guys the game plan of exactly what I'm trading and my thoughts on the market. Go to everbullish.substack.com. You can follow this for free, and you can also be a paid subscriber, $20 a month. Let's get to it. All right, so the things that we're bullish on, I have it right here. This is going to be a great week. I genuinely believe that the market has found some relief and is still extremely overvalued, but that's not going to stop me from getting while the getting's good. I mean, we follow the dumb money, right? Also have a couple stellar trades. I'd likely add this to my professional portfolio and some shorts. So let's cash in, huh? Just a reminder, the main theory here and the main reason that Ever Bullish does so well and that I do so well is because I use common sense and I have the experience. So get with it. Number one thing we're bringing up here, we need to have a very, very tight grip and understanding of interest rates. Interest rates are really the number one indicator. You know, we always say follow the Fed. The trend is your friend. And then we have some other rules here at Ever Bullish. If you're a subscriber, you know them. The yield curve is absolutely insane. This is an inverted yield curve. This is crazy. And this makes any type of fixed income or dividend paying investment a lot less favorable in this environment. Now that will change. And when it does, we're going to short the treasury exactly like our man Warren Buffett did. Sorry, I've got a scratchy throat. What I'm saying here and what I need everybody to understand is that in 1 month, if I give the bank 100 grand, they'll give me $5,300 back at the end of that month. Now, if I were to do the same thing with a 1 year investment, I have to give my money away for 1 whole year, and I still make less than if I just bought it for 1 month. That's actual dollars. If you go 2 years, obviously you'd be making this both years, but you'd only get $4,700 a month. I'm sorry, a year. And then going forward, we have the 10-year yield at 4.48. I never thought we'd get these numbers so high, but it's because the Fed is basically trying to have to balance on a knife edge the emotions of investors as well as the math behind all of this. And look at this. If anybody out there is buying a 30-year treasury or a 30-year bond fund or a bond fund, anything over 1 year, you're crazy. I have some options for you, but you really need to get the net. You got to get with it here. So little explainer because for that right there, we also have bulls. This is why I don't push bonds. This is why your advisor hates the asset allocation product he or she sells. This is a bunch of BS nonsense. If you were to tell somebody to invest in something that you knew was going to lose them money and take away their current opportunity cost, you're an asshole, you're an idiot, and you need to follow me. And if you're a fee-based subscriber to any other investment products, a fee-based owner of any investment products, you just can't have that. Now we're going to go to the news. Why the presidential election years have a positive historical market. Check it out. So if you follow the Investor's Almanac, the Stock Trader's Almanac, if you've ever even heard from an old timer on the golf course, you'll know that historically the market does really well, regardless of the economy. When it's an election year, it doesn't matter Republican, it doesn't matter Democrat, it doesn't matter independent. The reason for that is very simple. It's because of the news. There's so much more news, which is 95% of the average person's pulse on the market. They have to follow a lot of these other issues. So like worldwide, Xi Jinping, a lot of information on the House of Representatives, talks in Cairo over a ceasefire, Israel. We all know what's going on over there. It's horrible. We're going to take advantage of it. And we already have, if you've followed my previous post, which is another great reason to go subscribe. Business and finance, there's almost nothing about just the current state of the market. Buffett praised Apple. We're going to get back into that guy. I just think we're going to get it cheaper. Starbucks, basically talking crap to other companies and reasons that they disappointed. And then the Boeing, we've already known all of this. Every bit of this we've already known and understood and have been essentially investing for what are we at? 27% for the long-term portfolios on the market and probably around 100 for the traders this year. It's because we're using common sense and we understand that the news causes the market to perform historically well in election years. It's because they're not going, hey, did you know that we've had 133 new highs over the last year and a half in the stock market? Do we know that the 3 best stocks in the market are trading at over an 80% PE ratio? That type of thing. So thanks for getting with me on that. We're going to follow interest rates very closely. I know it's boring. If you feel like smashing your head into a wall, that's fine. Just follow the trades lower down here. But this is how you learn to be the best. Sector-wise, this is another great one. Sector summary is that this is today. Energy stocks were up 80% in volume. Financials, materials, healthcare, utilities were on the downside. Now these number 1 and 2 here, energies and financials, as well as consumer discretionary, are on the rise. That means people are like, okay, I'm going to stay invested a little longer. The sell in May strategy might not be holding on for me. But if you look here at the 1 day, energy, information technology, all up. And then if you can go to the bottom there, it's going to be tech at the bottom. So tech is how we know if the dumb money in the market is still doing favorably, or people think that it is, and that's where the money's going. We'll go over here to the 1 month and the 1 week. Same thing, right? So tech is on there. I don't hate that. That all happened after Wednesday in the Fed. Energy's up. Consumer staples are down, surprisingly, and utilities. We're going to see this thing basically flip over, but still have materials and utilities on top. And likely we're going to have some financials too. That's called defensive investing. That's how we play defense, right, Bulls? There you go. Hey, what's up? There it is. Utilities, energies, consumer staples, positive. And then what's wrong? Tech is barely up. Discretionary is barely up. Healthcare is barely up, and so is real estate. So thanks for getting with me on this. If I paint the picture even louder, it's the same story. When we look at the 6 months, and we can see this is called a capitulation. Not only is it a fun word to say, and not only does it make your friends think that you're smarter than them, but this is how you play defense in a portfolio. And again, with the common sense, we play defense. Like, let's not try to make this what it's not. Let's let it be easy. Let it be an easy trade. So for the stocks to follow and the trades to follow, I've got them for long-term investors, intermediate term investors, which is called swing trading. We also have the dip trading, which is part of day trading. And then we have the day trades. And I'm an options expert and guru too. To get my options, you have to subscribe. It's $20 a month. Your first trade will pay for an entire year. And this is just the best thing you got going. We're going to get rich and try to retire early, right? So just a little bit of a note here. I'm going to all out buy for AMD. I told y'all I was bearish on tech. We've seen NVIDIA take a 30% slide in a week, 2 weeks. AMD, in my opinion, is kind of number 2 behind NVIDIA on the best that there is out there. But if you look at its PE ratio, the price to earnings, which is a way to value a stock, the PE of AMD is a lot more favorable. It's a treat right now. As the young kids say, it's a snack. So go snack on AMD. I also have the Bitcoin ETF. Bitcoin, I've told you this all year. The reason we still have it in our professional portfolio, as well as the reason that we're trading it today, is that Bitcoin is just historically, as well as economically, as well as niche-wise, with the hash rates and some of the explanations that have come out about how it creates new shares. Bitcoin's going to run. I've been saying it all along, but I think that we're going to hit 100 this year. If it doesn't, that's fine. We've already made 27% in the professional portfolio, literally mostly because of Bitcoin. And then I've got another great one for you. It's AFRM. So what AFRM does is AFRM is a company that does micro lending and not even micro, but small lending for individuals with low credit to purchase items. So, if you're getting your credit card's already full and you got to go buy this, let's call it a computer from Best Buy, you can go in and they'll go, okay, well, let's make sure this will work for you. They can adjust payments a little bit differently, and they're usually a lot, maybe half, maybe a little bit more than half cheaper from an interest rate perspective. And because people are overall wise about how they use credit, they pay these things off quick. So instead of looking at a bond where we have to find the half-life is what it's called on the way they calculate how fast mortgages are paid off, these are turning over quick. I also believe that they have, I don't even believe, I know that they have hundreds and hundreds of organizations and companies that they basically advertise with, and these sellers, like at Home Depot, if you can't afford what you want, but you have to have it to save your house from flooding, let's say, they can sign you up with a firm. And then now there's an incentive there because a firm does pay a commission to that company, that agency, and the agency gets more, the company gets more sales, right? And then I have Riot. You guys know all about this. I've been screaming this from the mountaintop since 2017. Riot is a Bitcoin miner. There's another one called Marathon that I really like. There's another one called SOS that I don't like because we made a bad trade in that last year. But the miners, just take a look at all the Bitcoin miners as the market goes through a lot of instability over the next couple months, as the market is already over priced and it's way too buy heavy than sell heavy. Bitcoin always runs over the summer. And that's a beautiful thing that we're going to take advantage of. If you buy the miners like Riot, let's say the market goes up, Bitcoin market goes up 2%, Riot's typically going to go up 6 to 10%. So for my day traders, you're all hearing me on the day trades, guys. You can dip trade, day trade. You can if you tighten your limits, you can make money in this nearly year round. And then you can short it too. When you see that Bitcoin drops from $70,000 to $40,000, you can go, all right, let's buy some puts on or sell some calls on Riot. So that's the way to go for you guys. For the conservative investors, I want to make this a pretty loud point here. Conservative investors need to be aware of REITs. Annaly Capital, NLY, is the favorite REIT that I've had and I've been using for years, and it's been getting my dad 14% per year from an income perspective. So it's great to own in IRAs, particularly for the older, or maybe not even older, but more conservative investor. 13% for a level on 1 to 10 of like a 9 as far as expectancy and stability. I love that. And don't sleep on PFF, guys. I've been teaching all the lesson for a long time. PFF is just an ETF, but that ETF buys preferred stocks. Preferred stocks are wonderful investments because depending upon what's going on with interest rates, which the Fed tells us every month, sometimes they act like stocks and other times they act like bonds, but they have high yields. I believe PFF's at like a 7% yield right now. And also if the market's good and the economy's good, or if banks are spending a lot of money, that should be up another 7 to 10% in your portfolio on the year. So again, a little bit more about conservative investing as we go through what's coming up this summer and what I think is going to come up in maybe first week of June. We need to know these type of things. And then one of my favorite securities ever, the most conservative investor I've ever known, who used to work with me and makes a ton of money and is very frugal with his spending. He's had his portfolio in Fidelity Conservative convertible securities, CFCVSX. And the best part is that advisors, those scumbags in the office, they can't recommend this to you. As many of you know, part of the reason I started this is that when the laws came out and changed in 2011, right around the time of Madoff and a lot of other money schemes and scandals, the government standardized using portfolio allocation, meaning only owning some things and owning a combination of all of those things all at the same time. You couldn't even recommend unless I'd have to get approval and run it through a computer, talk to my boss about it and make sure that I could wiggle the computer to recommend this. It's ridiculous. So that's why this service is great. And that's just from my own personal. I want you to be able to invest in anything out there, but also only the things that make sense. And unfortunately, you can't do that in any firms these days. So go buy my portfolio at everbullish.com. It is $200. Subscribe to this. It's $20 a month or $200 a year. And again, your first trade, the results of your first month of your portfolio, historically speaking, are like 75% to just literally make all of that money back. So these are the charts in order. You'll have to go subscribe to see everything, but I do love me some AMD, and I explained why. And if you look right there, what do we love here? We have the RSI under 50. Number one rule, make sure you're going to buy something with an RSI under 50 unless it's in breakout. Same thing here, the Bitcoin ETF. Look at the range we're dealing with. We can go from 12 to 33 bucks, and we're kind of like at, what are we at, 26, 25? Common sense, easy trades. You can throw options on these bad boys. That's what I prefer to do. And then AFRM. So check out the chart on AFRM. AFRM is the company that I was talking about before. They are the financing and lending of consumer purchases. And then Riot. What happened when up here? How'd we get up here? How'd we get up in this red? Sorry. Sorry. There we go. How did we get up in this range from? That's still not the right one. Darn it. There we are. So you get my point here, though. Like these big, massive up gaps is when Bitcoin, maybe a couple days after Bitcoin ran on a weekend. Same thing here. Typically, Bitcoin runs up on the weekend, and I can't believe I'm sharing that with you guys because that's straight from like the honeypot of knowledge that I've got for you. And then swing trades. We're going to move on here. I know I'm getting long. NVIDIA, love it. AMD, love it a little bit more. But from a swing trade, I mean, if you were to throw a, let's say like a 45-day call, just buy a call at the money on both of those, in a month and a half, it may not be in the money, but I guarantee you it'll be in the money in heavy and big time in the next couple of weeks. Told you about Bitso, 3-month swing. And then Lululemon, guys, the old savior from the past, from the 2014 when it was at like 48 bucks, and then it went all the way up to 450. Lulu, especially if you chart it, and I don't want to inundate y'all with charts, but Lulu is, let's just say that economically, no matter what happens, the rich people are going to own Lulu, and the middle class and poor people are going to want to buy Lulu. And the stock charting of it just looks impossibly good from a technical perspective. And it's one of the most beloved consumer, I would call this a consumer discretionary item because there are cheaper substitutes. But I don't even have to convince you. That's the best bet today. And then another big one. This is an interest rate play, guys. We're going to go long. You can buy, I can buy, we can all buy just the stock outright, or we can do some options on it. I'm going to throw an option, probably another 45-day, and maybe even a sooner one. Just buying calls straight up, own it, no spreads or anything like that here. CarMax has been taking a big dump because of the interest rate fodder, the discussion from the Fed. This is what I mean. This is like the Fed is telling us. This is why we follow the Fed. They're telling us, we know the market's crazy, but we're going to keep pumping steroids into it by allowing easy money. And then finally, some shorts. I love shorting stocks. Why not play defense? Why not get an interception and be back on offense? I think Palantir, which is doing very well right now, let's say in a week and a half, 2 weeks, just have it on your watch list and move it to your ready list. Palantir is going to have a big sell-off soon. They are overvalued. Right now, they're getting the Kathy Wood investment. She bought 40 mil of Palantir, and that's got the news running, and it's got it in a lot of like favorable areas as far as investors. But check out this range, guys. 759 to 2750. What has changed to cause that? Did it just become the best security company in the world, internet security company? Probably not. So I'm actually look at all this. Bears. So half the people love it. I'm just not with that. So what I'm going to do is I'm going to do some spreads. If you notice, the best thing you can do is buy or sell volatility, right? Because we always know if the market doesn't stay stable, particularly in May, particularly over the summer, and it never does when we're all waiting on bated breath for the next discussion from the Fed, who's going to yank all the money out of our pockets. That's what they do. That's what they have to do, guys. So 21 to 27, what if I just bought, what if I bought a debit spread? What if I said, like, I won't make any money above this? So you go, like, they're supposed to go 2 standard deviations out of the way, but I don't even mess with that. If you were to just buy calendar monthlies for a debit spread, so you're selling puts above and below the strike and calls below the strike price. I can show you exactly how we're going to do that, but you got to be a paid subscriber for that. Again, it's $20 a month. Go buy it. But that's going to be an easy one. We're also, if you look at the RSI on Palantir, we're at 70. That's too much. We don't buy stocks at 70, right? So the more this thing runs up, the more likely I am going to put a put on it. So if you don't want to do the spreads, if it is too complicated, it does take time to mock up. You can always just wait until you see another one of these up gaps. And if we don't see one, maybe we missed out. But next time we cross the bottom of this this candlestick here, it's going to be perfect. You just buy a put. We know we're shorting it. We know it's going to go down. You can even just short it through margin. So if you have margin on your account, you can just place a sell for that stock on margin and then rebuy it when it's cheaper and keep all the money in between. The best short is Peloton. So Peloton, I don't know if y'all seen the news. They did get a new CEO. This is called a new CEO bump. This is a really dumb money play. That company has always been too expensive for anybody to really value it. If you want me to pay $5,000 for a treadmill, even no matter how rich you are or how much you value that, it'd be foolish to do that when you can go to any gym in the world and get like wet towels and have the spa and have the sauna and have the weights and have the classes. Peloton's done. This is a last hurrah. They did fire 400 employees. Now that's after they fired 2,000 a couple of months back, and then last year they fired 4,000. So now we're at the kind of the dwindling employees. Just short Peloton. So dip trades on everything. I kind of explained that. Don't forget that you can go buy one of my portfolios. They are ridiculous at performing, and they use common sense, and there's only 20 stocks, and it takes about 45 minutes a year. So $200 in 45 minutes a year for you to be making 3 to 4 times your results at the average money manager, or definitely if you're an index fund, go buy one. You can go to the website here and click. I'm also getting my YouTube back rolling, guys. My feelings got hurt from the internet last time. After I did 3 years of all completely free trading, and still got negative, nasty comments, but I'm in a better place now. So start making money with your mind, or you can just borrow mine. Let's do this, guys. Let's go get rich. AFG, LFG, LGR.